another section. Today we are going to be talking about the Empire Smart, which is protecting the treasury, protecting your capital. You see this number one, the foundation, the 1% rule. This is the professional standard since I knew Forex. And this is for beginners. This is for you beginners or those that want to join Forex or those that just started Forex. Stick to this 1% rule. But the difference between a professional or the professionals and the amateurs is not the tactics we use, it's the survival arithmetic. Just like I told in one of my previous videos, the military people, they always do their assessment. One of them is win or it doesn't, the battle is not going there, they restrict the exit plan, how to fight another day, they reassess, calculate casualty. We are all military people in the forex market. You are a general, your capital is the soldier. So please make sure you follow this 1% rules. Okay, 1% means you just need 51% win rate to get 50% of your capital. Your maximum is 10% drawdown, and that is for the month if trade doesn't go your way. Why do I say this? Because it's what we call risk to reward ratio. Okay, I'll explain it down. Explain it later, not down. But this 1%, let me just read the Empire primary rule. Risk maximum 1% of your account per trade for standard operations. This ensures mathematical survival through inevitable losing tricks. Now let's take a particular example. You may have a 5 days losing trick. You just need 3 days to recover your profits and to recover your losses and be on profits. We are using risk to reward ratio 1:3 and it actually goes your way. You just need, that's why I said 3 days. You just need 3 days to just be having risk ratio 1:3 to hit profit just 3 times rather. You not just make back all your losses. You will be on at least 2 or 3 days winning trick. That is just the simplest way to explain it. The next one is position incising, as in this is a professional formula stated here where your size lot or your lot size, like I always say, your account balance times the risk percent divided by your stop loss in pips times the pips value. Let's assume you are starting with $1,000, 1%. Your risk per that trade, risk for that trade should be nothing more than 10%. If you are trading gold, that is 100 pips stop loss. Now some might ask a question. You want us to use want us to maintain the 1% 1% rule and we are starting with $10, $20. The truth of the market is, the truth of the matter is the current trades we are having today is a known fact, especially between professional traders that $10 is too small to trade with. Just one spike on the 1 minute can clear that your account. That's why depending, like the broker I use, Valatex, they offer cent account, which can still make you or enable you stick to the 1% rule. Because for a $10, if that's where you're that is what you can afford at that time. Deposit your $10, be patient, grow the account. In no time you would have made at least 10% and above for the month, which is practical. Trade with me, you see how possible it is. Last week, me and my mentor called a trade and he did 1,500 pips. And let's assume you're using a mini size lot of 0.1 or the cent account or 0.05. You would have made nothing less than $1.5 on that thing. The Jordan, not afraid the Jordan will blow your whole $10. So stuff like that is why we say for beginners, no matter it's the your capital, maintain this 1% rule because you people want to be trying things yourself. So maintain if you are trading by yourself, 1% rule isn't bad. And let me say one thing about the leverage for your own self. I mean, for beginners that you're trading for the first time, don't use more than 10 for the leverage 1:10 or 10:1 depending on the broker you are using or 2:1. See, okay, if you are my student or my client, I can tell you, okay, for this pattern of trade, you want to create this account, if you're trading like this, use 1:1000, 1:2000. We are professionals, we know why we say things like that, and we show you live on when we are trading live. I tell you why I tell you set it like that, change the leverage because of the market. Leverage doesn't really have more impact, but based on the spread and everything for beginners don't. Then we have come to the next one, which is the 1 to 20% tactics. This is for experienced traders alone. Because any professional trader will tell you, sorry, they just see slides and found nothing. Like I was saying, 1:20% rule, they will tell you I'm not supposed to be teaching beginners like that. So that's why I started with this section presents an aggressive alternative for experienced traders who have demonstrated 6 months plus of profitable 1% rule consistently. Beginners master the 1% rule. Use demo to take your trades for now. Don't just be too much in a hurry like the mistake most of us did, me. Don't be in a hurry. The market is always there. Once you are a master, just enter the market, be picking your profits. You may even get tired of making profits. Most big boys now in the market, they don't trade all the time again like they used to. I made a lot of money. They just trade once in a while or once a day. That is all. So we have the 22, because like now for instance, I just made an instance here where I said if you are using $1, don't risk more than 10%. Depending on the trade we want to enter and the loss size we want to use, we can set that that's to okay, I'm taking $200 to make $2,000 to make $600. We know when we stake it, most of the time we scalp. Scalping doesn't go in our favor. We can say okay, the highest we are losing or we are ready to let go of is $200. But for this, you won't know the length of the market to let go of and when to go out of the market or when not to enter. Because one thing about market, you can have all the knowledge, but if you don't have the knowledge of execution, when to enter the market, when not to enter, all these things I'm preaching for you will be wasted. to stick to. Now we have a 22 days trading formula. If you want to be a 245 trader, that is a Monday to Friday trader, no time you want to be trading gold like us, or currency pairs, commodities. Let's assume you as a beginner, you are coming in with $4,000. This will be your sharing formula. At least in a month, you have nothing less than 22 days, working days in the month. Divided by 22 days. That means every day you are fixing not in more than $45. Can add it up to 50. That means you are using 20 days. And there's nothing if you are using this formula, your whole month you will not see profit, not just profit, and you will not hit full TP for the whole month. It's not possible. Why I'm telling you to use all these things so that if that day things the market doesn't go as planned, you won't blow your account. You have something to trade tomorrow. I'm going to be very brief in this section, but I'm highlighting the main things. But if you want to be a crypto trader, the 30 days cycle, you want to trade in indices, divide it by 30, you give you 33 point something, approximately $34. Just be using that. If you are making 10 to 34 or even $100 a day is something. My years of experience and my years still trading, I take whatever the market gives us, gives me especially, gives my clients, gives my students. We don't force markets again so that you won't have BP or start crying or you start joining people to say Forex is a scam. I mean, sincerely, you are the reason for your own demise. Critical safeguards. Daily meanings not 2%. We are all human beings. 1%, $10 you enter. You want to see if it's another 1% again. But so let's assume the two times you enter with 1%, it doesn't go your way. Stop at that 2% dollars. I mean 2% Jordan, which is minus $20 on a $1,000 account. Stop at that two losses. You go again tomorrow. The market is always there. You don't see your setup playing the market. You rest. So that is that for that. We go to the safety net. Beginners, you see this one. This one is for you, even for expert traders. Even me that scalp. If I enter a scalping market, I even put stop loss now to avoid spiking, to avoid the rumor it will reverse. If it doesn't reverse, you call. If you are watching us for the first time, in my introduction video, you will see where I gave practical example why you need to follow the 1% rule, especially if you are going to be a binary trader. If that is the style of trading you want to do, you need to stick to this 1% rule. Then you're having a stop loss for the day if it doesn't go your way, and your take profit. Discipline is the key. Discipline is the key. Every day is not Christmas where you flip $100 to $1,000. It can't happen. It can't happen every day. Sorry for that long grammar. How do you take your support? I mean, sorry, your stop loss and your take profit? It's very simple. My number one favorite, which, like I said, it applies in anything: support and resistance. Can leave this ATR time base, also support and resistance, break of pattern, sharp patterns where you take your profit or your stop loss. Now the take profit objective. Where you hear me saying Oh yeah, yeah, how we be this? Just not talking about risk to reward ratio. 1:1. Okay, you are staking a whole, you are using $50 every day. So your $50 should give you $50. That is the 1:1. But there are some times where the may not see, okay, if you are using 0.01 now, you risking $50, that means you are for gold now. Because gold is what I love. For gold now, you are risking 500 pips. If you think 500, beginners will think 500 pips is small numbers I'm talking. No, 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 no. So when you join my live section or when you start practicing on your own, you will see the importance of this. Let me go back again. The importance of this position sizing. As a beginner, stick to 0.01 first so that you won't really cry. There's no need to sugarcoat it so that you won't what? You won't cry. Okay, you have to stop the light. That out. It's too much so that you won't cry. Where are we? Where yeah. That means 1:1. I'm risking $50 to make $50. That's 1:1. For beginners, when you are in profit, you close back. Okay, let me just finish it. This even the next thing I wrote here. 1:2. That means you are risking $50. Which that is for gold now, and the 0.01. You are risking 500 pips. On the 0.02, you are risking 250 pips to make the 0.01. That means you are risking 500 pips to make 1,000 pips profit. That's what me and my mentor we are currently doing on our VIP group. 1,000 pips daily. Sometimes we have 200 pips, 300 pips. Like I said, be too long in the game, so we don't fight the market or force the market to give us. Sometimes it's only 50 pips. We are okay for the day. But your week should be what should be like that. So by now you already know what 1:3 means. 500 pips to make 1,500 pips. Note below. We don't necessarily use your stop loss must not be 500 pips. So 500 pips is wide. It's too big. But I'm just giving this is just for instance. It's like yes, just for educational purpose. Don't go and say okay, I'm using 0.1. Start calculating 500 pips. It's not what we only do that when we know okay the market is either ranging or short bid and we know okay after the dance is doing it must still go our direction. The times I've staked 500 pips out of 10 trades this year alone, when the period I staked 500 pips, 7 played, 3 did not play. So know your market, follow your mentor, stick to rules before you start mixing big amount or using ridiculous big pips. Another way to enjoy consistent profit is closing partials and um, or setting your break even. I will do a video on this next for you guys. What I mean by closing partials and setting your break even. Personally, I will do this for you so that you enjoy, you will understand what I mean here. So let me not waste your time. I will do this for you. Screen record it with my MT4, MT5, and I'll show you how. We also have drawdown management, which is another good protocol. That's why I say beginners always set your stop loss and take profit, especially your stop loss first. It's painful here when winning trade turns to a losing trade, like market can reverse and hit your stop loss. That stop loss is good because in fact it stops you from having more loss. But when you are saying don't use stop loss, you saying the market will reverse. Hey, you are seeing minus 200. Hey, God, abeg carry this thing back to my entry. I've done it before. That time your heart will be pounding, your BP will be increasing. You don't need to go through that pain, through that hellfire. Stick to stop loss and take profit for beginners alone. I said this some minutes ago. Even me that is scalping now, is how the market is. I set stop loss to scalp 30 pips, 50 pips, 100 pips. Professional traders will know what I'm talking about. I step stop loss. So you beginners, you don't have excuse not to set it. So like I said, the Jordan rule, okay, I already explained it, but let me explain it again. Daily Jordan for beginners should be 2%. You entered first trade 1%. With your 1% roll didn't go in your favor. You entered another day your 2%. That means another 1% didn't go in your favor. Lock off for that day. You just need one trade to just go depending on what your mentor or the Forex guru will tell you. If you go to a direction, even you will be shocked where your 0.01 can actually give you $150. People in our VIP group can testify to you freely. So weekly 5%, monthly 10%. This is risk management. I don't need to explain it because if you lose 10%, you need 11% to be back to be more profitable, as it to be back on profit. When you are losing 50% of your capital and now market is very choppy and ranging, but we're still winning like last week. Total of 6 trades, 5 wins, 1 loss. But when you have lost more than half of your capital, you are putting yourself under pressure. You are putting the professional trader under pressure because both of you want that thing to rise up. And if it's not going, you start disturbing us. We call blah, 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 blah. So don't just put yourself in that condition. What killed us must not kill you. Learn from our mistakes. So express command. Never exceed 10% monthly drawdown. Recovering from deeper holes requires exponential returns that destroys risk discipline. Let me give you a live example of the past. Sorry, of the past. Gave some trades to some client, did said okay, does not want me to do account management. I'm like, okay, at least minus one account. I don't need to be under pressure, be subscribing to VPS and the rest. And that is good. Just for him to meet me, shout me up exactly okay, 8 to 9 days later. Sir, please save me, help me. I hit some kind shutdown on see. Alright, what happened? This guy was on a Jordan of minus 700. Close this trade. No, I say let me see what I can do. Where I scalped that account at that time, I wasn't looking at my risk management again. Which risk management I want to apply to an account that is about to be blown or that was about to be blown. Yes, I carried it back into profit, but it took me more than 10 days to carry that account into profit. I had to start doing what we call pullback trades, taking trades at pullback, scalping at on a 0.1. Once the thing is beating 10, $17, sometimes $6 I'm closing, pull it back again after a major dip. Once it's beating down, enter multiple position. Once I'm seeing about close to $20 to $50, I'm closing now, I'm setting break even just like that. Why was I doing that thing? At least with the profits I'm making, it might reach a point where I just have to close the rest, the losing trade manually. So the stress, mental stress, trying to prove to myself I can do it, like I've done it before, pressure me, the pressure on the guy, and I hope he has learned from his mistake. Though I scolded him, top of it, give me my percentage. I demanded my percentage, so I deleted his account because I hate trading for clients that will put you on a tough spot. Don't be in that position. In trading, kill hope, kill greed. Fear, at least fear can make you miss an opportunity that would have given you great profits. You require if to say I know the fear, now speak pidgin. Say hey I know the fear for make $300 today. But at least you know didn't make a minus than being so reckless. It was those pullbacks trade I did last set, did it, I didn't close, I just said break even. We hitting it, did not reach any of my break even, just started going up. Was at that moment when I saw okay, the gap is no more much, minus $300 has already made small. From that 900 it has reduced drastically to minus $300 after coming back to about doing a 200 pips buy. That was when I was able to close that trade. Scalp the next day, that week was like small, made $1,000, collected my percentage. So please don't put yourself in that because every day there's a probability that my pullback method that I normally use once in a while when e reach support zones or resistance zone. What if it didn't work? That account now, if that account was supposed to blow in the next 2 hours, it will just blow on that same app. So the reason for all this many talk your Jordan and to avoid Jordan crisis, stick to stop losses and stick to risk management. So another way to ensure this is you using your what we can call journal. Must not buy a trading journal, 20 leaves exercise book can do this. Record all your profit, your loss. You can lie to the world, you can come online and say I'm only a profitable trader. You can never see a loss, consign also. You must profitable trader to see Jordan to let him that those with very big capital they can hold that trade for the next 1 month. There are already big names that can that they may have shown you that. So don't compare yourself with them. Stay safe. Why do you need monthly review? It makes you know that as a beginner, did I adhere to the 1% rule? Did I allow emotion take over my survivor ethics? All this time, out of all the times I exceeded my daily loss limit, was it just a one time thing? Was it a 1 week thing? Or was it constant like on a daily? In fact, it's almost I can say it's like now it's an habit, a trading habit of yours. This helps you to put yourself right in track. And did I take a 1:2 minimum target? Did it hit my break even? Let's understand this risk to reward ratio 1:2 minimum. All this deal with my trading requirements, stuff like that. So importance of it. So I'm ending this video with my key summary to all traders, even me. We help others to help ourselves. The goal isn't to be in the market. The goal is to be out of the market with profit preserved. Not just profit preserved with your capital intact if possible. The 1% who ensures your survival. That is ensures. Okay, let me just read it exactly the way it is here. The 1% who ensures you survive to trade tomorrow. Every day is not Christmas. Like I told you last week was sorry, 5 wins to 1 loss. The first trade for that last day was lost. We entered the trade again. We won it. But if I have blown on my account on that trade, maybe I did not join my profit too. That recovering trade I cannot recover. And that will make you frustrated and look very stupid. So this is very important. Thank you guys for watching to the end of this video. Please do subscribe with your notifications so that when I drop videos like these informative videos, you get to benefit from the information. Reach out to me. My link, my community link is in the description, and I look forward to seeing you all on my next video. But like I said, my next video I'm going to be dropping how to take partials. I'll just enter a trade, show you how to take partials, set your break even. Then I think in that same video or in another one, I will teach you people how to locate your trading view to do your analysis again. So I've said that in my last video, no, in the introduction of the module 1 video, but I will still do it again because with the right knowledge you can survive the forex market. Thank you. See you in my next video.